Thanks, everyone. I am Muneeb, co-creator of Stacks. Sometimes people ask me like, hey, why do you say co-creator and not co-founder? I feel like creator because the creation is separate from the creators now, right? Like it is a project that is decentralized and kind of like has a life of its own, right? Which is great, which is amazing to see. Doesn't mean I'm not actively involved. I am actively involved. I contribute. And I think other people contribute as well, which is a great place to be. So some background and history. I was born and raised in Pakistan in a small sleepy town, and in an army family. Got early access to the internet. So I think if 90s is when the internet was starting, like I was lucky enough to come online in like 97, which I think is still not bad. I was like 15, 16 years old or something like that. And I was the only one that kind of like had access to the internet in my neighborhood and so on. It was an exciting time, just fell in love with it, went down the rabbit hole, ended up doing research work on, internet protocols, distributed systems, and so on. Did a PhD at Princeton, and that was a sort of like a dream come true, like a kid from Pakistan who was interested in the internet. I read up on books on computer networking and whatnot, and some of those authors were the professors at Princeton that I ended up actually working with later on. And life actually came back full circle. Now some of the work that I've done is actually part of those networking books, right? So it's been a very interesting kind of like full circle journey to learning from the people, then working with them, and now being included in the work that they've done. And 2013 is when I kind of like went down the rabbit hole of Bitcoin. 2013 is the year when I was supposed to finish my PhD, and I was almost done. I'd written a thesis, it was on something else, and I was almost done. I took a leave and started exploring startups because during, as much as I loved being a grad student, I sort of like discovered this thing about myself that I want to commercialize cutting edge research, right? Like just being in a lab and in a more sort of like disconnected settings from the actual world and industry didn't sit well with me, right? So taking a technology to actual users, commercializing it, and something that is like cutting edge research, commercializing that's the sweet spot that is just I love. Like I'm not the person who's going to build like a consumer application or something like that, but I'm also not a person who's going to build some theoretical model that just stays in a lab. Like I'm the sort of person who wants to do R&D work, like truly groundbreaking stuff, but then actually take it to real users around the world and to mass market. And I think that's sort of like the passion that I have. And I think when I sort of like discovered Bitcoin, it had all of those characteristics, right? Like it's something that is deeply technical. Tons of work can be done there. And at the same time, it can have a real impact. It's not a theoretical system; it's a real system. It is changing the world. And I think that there's a feeling I had, and I think I want to share that moment. It was basically when I was even doing my PhD, and even before that, I always felt that most of the important things that in computer science, in a way, have already been invented, right? Like it's in a way a very troubling feeling that you're just doing incremental work. Someone already invented TCP/IP. I'm just improving the performance of TCP/IP. Or someone already invented, Unix and the operating systems, and we're just like fine-tuning things and just doing incremental work. And Bitcoin, for the first time, just felt like something that is truly new. And you're going from 0 to 1. It's just in a new dimension. And that feeling was really, really exciting, right? Like this is how it must have felt like in the early 90s when the internet didn't exist and then people created it, right? So I think that feeling was really amazing. And I remember telling myself that forget about everything you've done in your past life. The only thing that matters is sort of like making the most of this opportunity in front of you, right? So it's in a way a very liberating feeling. It's almost like a meditation that just forget about everything that has happened in your life. This is a privilege that you happen to be around when this big thing in the world was happening. And I think like people have gone through a similar realization with AI as well. Like there's a essay you should go and read it probably by Sam Altman. So I actually went through Y Combinator, and Sam Altman was, we were the first batch of Sam Altman. And Sam has an essay where he talks about basically this thing about working on something foundational. For him, it's AI, right? Like he started OpenAI, not started, like he's a co-founder there. And he talks about how when you find that, like 0 to 1 type of a giant leap, it makes everything else that you have done previously in your career a footnote, right? And I think he was probably having a similar feeling with AI that I had with Bitcoin, that everything is done previously in his life, and he's done a lot, right? Basically just doesn't matter. So that's exciting. And now I'm 10 years in. So I started in Bitcoin in 2013, and I still feel like, I truly believe that we are at still an early stage of Bitcoin. I think the sort of impact that this technology is going to have, like we're still at the early stages. This is we're nowhere close to even reaching maturity right now, right? So with that, like I have in a way, like I had this thesis, and it's pretty much inspired by how the internet evolved, right? And the thesis is that Bitcoin is very simple at the base layer. And we've seen kind of like the rise of Ethereum afterwards and some other chains. But simple protocols tend to win in the long term, right? And we saw that with TCP/IP, and there were other complex networks that gained some momentum, then faded away. And the simplest thing, TCP/IP, basically became the internet. And I think out of a lot of people have stuck around with that thesis probably longer than others. And now I feel like the world is coming back to it, right? The world is sort of like realizing that, oh, there is something interesting about Bitcoin, right? It is still the biggest asset. It's still the most durable. It's still around. And if you look in the market right now, a lot of these alternate L1s that got started are actually struggling, right? Like I'll give you some example. Helium became an app on top of Solana. Celo recently, just last week, announced that they're going to become an ETH L2. And there might be a bunch of others who are now becoming L2s on top of Ethereum or some other chain. So there's a little bit of a consolidation happening. I don't think we're at a stage where new L1s are not going to launch. I think there's a huge design space. People are going to do it. But there's definitely a realization that you'd rather be an ETH L2 than an L1. And I think that's like early, and at the same time, people are realizing that you can do a lot on Bitcoin. And I think the next step of that is when people realize that if you could be an L2 or just some app on Bitcoin, why would you build anywhere else, right? Like we saw that with Ordinals, that as soon as people realize that my NFT could actually be on Bitcoin and it's more valuable if it's on Bitcoin, why would I take the risk of being on some smaller chain that might disappear when we know that Bitcoin is going to be around for decades or centuries or whatever? Or another way to look at it, if Bitcoin disappears, everything else would be in trouble anyway, right? If Bitcoin goes down, there's something wrong with Bitcoin, the rest of the industry is going to get wiped out as well with it, right? So why take the chance of the additional risk of actually going somewhere else when you can do things on Bitcoin? So doing things on Bitcoin, at least right now, do come with some challenges. And I think it's important to understand those as well. And there are definitely basically two categories of it. One category is that the infrastructure and tooling is not as mature. So it's a pretty simple thing. Infrastructure and tooling is not as mature, so be prepared for some challenges around it, right? But that is engineering. I think it's just going to improve, right? Like it's just a matter of time. There are already companies that are improving it. Just a matter of time is gonna get more mature. So it's nothing fundamental there, right? The second thing is Bitcoin culture is not that supportive or welcoming to developers. But again, that thing is changing, right? Like if you have a heads up that some crazy people might yell at you on Twitter, just ignore them. And go to builder conferences, right? So we started a Bitcoin builders event instead of like these crazy fundamentalists, economic theorists that are around in the community. So if you have a little bit of a heads up and you join the right communities, for example, the Ordinals community or the Stacks community, then you see the friendly developers there and you can navigate it. Again, it's not something fundamental, something that will just change as more and more people join Bitcoin, I think you have to worry less about the cultural issues, right? So those are two things to sort of keep in mind when you're thinking about, hey, should I build on Bitcoin or somewhere else? Now, specifically, why stacks? So the interesting thing about Bitcoin is that because it's very simple at the base layer, it doesn't have smart contracts, right? Doesn't mean you can't have L2s that can have smart contracts, even though Bitcoin could actually use better support for supporting the L2s, not supporting the smart contracts, but supporting the L2s that can then support the smart contracts. And that was the thesis. So 2017 is around when Stack started. Before that, I was building Bitcoin L1 protocols and applications and so on. And for Stacks, the idea is actually pretty simple, right? Like in 2017, we said that let's build a layer. We could see the signs that Bitcoin is going to scale in layers and L2s. And let's build the L2 that has full smart contract capability, almost like Ethereum on Bitcoin, right? And at the same time, Lightning started, and Lightning is more simple, right? It's just payments, and there's no chain, no history, so it doesn't have smart contracts, and it's a different sort of like a use case. And at that time, people wanted to scale Ethereum like the L1, and Ethereum L2s were sort of like starting. And I feel like now we've at least been proven right that most of the scaling efforts around ETH L1 have been discarded now. Like people are trying to do sharding and this and that has just been discarded. And everyone sort of like now agrees that the only way to scale Ethereum is going to be ETH L2s. So Arbitrum, Optimism, those types of projects are kind of like more the way to scale Ethereum now. And the same thing is going to happen with Bitcoin. Right? Just like people realize organically that ETH is the only way to scale ETH is L2s, people are realizing organically the only way to scale Bitcoin is actually L2s. But L2s on Bitcoin are actually even more interesting because they bring functionality as well, because you can't have smart contracts on the other one. So Stack has gone through a bunch of iterations. The mainnet launch happened in 2021. There's the existing system that's live. And, at the just to give you an idea, like Ethereum L2s are something like $50 to $60 billion market. Ethereum itself is something like 250 billion. Bitcoin is a 500 billion plus market, and we're in a bear market right now. I think it's going to be in trillions. It was in trillions, last cycle. And Bitcoin L2s right now are not even 2 billion. Stacks is like 70% of it or something like that. I think after Stacks, the biggest project, at least by market cap, is Rootstock, and then there's other smaller ones, right? So there are different metrics, like how you measure how big or small something is, but in terms of developer traction, in terms of just capital raised by different entities in the ecosystem or market cap, others, I think it's safe to say Stacks is like one of the largest, the largest Bitcoin layer out there. And I think like it's early for everybody, right? Like I'm less interested in like how big Stacks today is or not. I am more interested in how big can the Bitcoin L2 category can be, and how much can we just expand the pie for everybody? How much can we just expand the Bitcoin economy? And I think that potential is huge, right? It's in tens of billions, if not hundreds of billions of dollars, right? So that I think is exciting, and that's why we try to collaborate with everybody. Like we are trying to bring everyone to the table and effectively say, let's think about how to grow the Bitcoin economy, because I think everyone benefits if you're successfully able to do that. So a little bit more about Stacks, like what's unique here. I think the way to think about this is that the goal of the project is, can we build the best Bitcoin L2, right? And Bitcoin has some limitations. Bitcoin is basically missing some opcodes where you can't have, let's say, Arbitrum style or ZK style roll-up like L2s. The difference is that Bitcoin L1 can't verify information coming from L2s or certain type of information, right? Lightning is the only thing that's kind of like a quote unquote true L2, because Lightning is so simple that it can be verified by Bitcoin script, but other things can't. Like more complex, more L2s with a full execution environment cannot be, right? So what Stacks is doing is that let's get as close to a true Bitcoin L2 as possible until you can get those opcodes from Bitcoin, right? So what are the properties? One really interesting property for L2s that is important is security. So as I said, there's the current version of Stacks that's live today, and then there is a massive major upgrade that's coming. It's called the Nakamoto release. Sometime later this year, we'll have that. And it's going to have very interesting properties. One thing it's going to have is it is going to have 100% Bitcoin finality. What does that mean? It means is that if somebody does a transaction on the L2 and someone wants to reverse that transaction, they'll have to go and attack Bitcoin L1. So 100% of Bitcoin hash power is actually securing all of the transactions on the L2, which I think is a very nice property to have, because then you're sort of like saying that as Bitcoin continues to grow, my application security is going to keep growing with it, right? And as more consolidation happens towards Bitcoin, you're just benefiting from it. Any data you're embedding, anything you're doing, you're just always, secured by Bitcoin security, and that is great. The second thing is that right now, it's not that easy to move Bitcoin liquidity into the L2. And in hindsight, maybe this is something the devs should have focused more on, even for the initial release in 2021. But now there's a huge focus on that. That how do we make it super easy, super fast to move your BTC from the L1 to the L2 and then back? Moving from L1 to L2 is easy. Coming back is the hard part. And over here, the way it's called SBTC, right? So just like you have Sats on Lightning, or you have RBTC on RSK, or LBTC on Liquid, SBTC is the asset once you move BTC into the L2. And over there, the property is that it's an open system, right? So you're not trusting any multi-sig, you're not trusting any known parties. So Liquid is a federation. There are a couple of companies that have the keys, and once you transfer your BTC to Liquid, you're effectively blindly trusting them that they will give the Bitcoin back. Not the case here. It is an open system. Anyone can become a signer, and the signers have economic incentive, right? So they lock capital, where if they misbehave, they can lose that capital. So it's a little bit like how Ethereum has people, they lock capital and they participate in consensus. And that's how the system is working. Over here, people lock capital, but the work that they're doing is they're actually transferring BTC back from L2 to L1. And I think that's a very interesting system, which is being built right now and can go live. Other things that I would highlight is that because Stacks is like, think of that as it's trying to be as tightly integrated with the L1 as possible. So if you're writing a smart contract on Stacks, you can actually read all of the Bitcoin information. So if something happens with Bitcoin, it can trigger a transaction on Stacks, which is very interesting. So now people can just do a Bitcoin L1 transaction and interact with a smart contract, which is a very interesting property to have. Similarly, you can have atomic swaps. So you just on the L1, you can trade, and this is live today, an asset from, let's say you want to go from BTC to a stable coin on the L2. You can make that atomic swap today using Stacks, just because how it's built. It's sort of like built on top of Bitcoin. It's watching the Bitcoin state all the time. All of the data on Stacks is getting embedded. If you just saw the Babylon chain presentation, Stacks basically has that baked in, right? Every single thing you do on Stacks is automatically getting embedded on Bitcoin. And now, after the Nakamoto release, you'll see a much stronger version of that it will actually follow Bitcoin finality, that you can't move, you can't change anything without actually changing Bitcoin. So one thing I would sort of like warn you right now, as you're sort of like, at the early stage of experimenting, as I would imagine, is that the current version of Stacks, it runs at Bitcoin speed, right? So people might be used to fast speeds on Ethereum, Solana, other places, but right now Stacks runs at Bitcoin speed, which means that 10 minutes to 30 minutes for a transaction confirmation, which is not the ideal UX. So that's a problem that is also being addressed with the Nakamoto release. And basically what the developers figured out is that you can have a VDF, which is a verifiable delay function, that can give you much faster blocks in between two Bitcoin blocks. So even if a Bitcoin block happens after 10 minutes or 30 minutes, the future version of stacks that offer Nakamoto release would give you reliable blocks every few seconds. And I think that that's huge, because this is something that I feel is a pain point with just Bitcoin UX. When users use Bitcoin, especially if the fees become high, it's slow and it's expensive, right? And with Offer Nakamoto, you could just imagine that in your wallet you can peg in your Bitcoin, and now on the L2, Bitcoin is fast and it's cheap, and you don't have to worry about any lightning channels, liquidity paths, anything like that. Anyone you want to pay, if you want to interact with a smart contract, you can just do it, right? So I think that's going to be a significant jump to the UX of Bitcoin in general, not just stacks. So I think I've covered a bunch of this already, but I do think that given some of the challenges I mentioned, that some of the tooling and infrastructure might not be as mature as some other ecosystems like Ethereum, but on the flip side, that is an indicator of a blue ocean opportunity, right? That there is a lot of opportunity. You're early. Yes, there are these challenges, but if you are able to overcome them, then you're running after an opportunity that nobody else is sort of like running after, versus some of the other places in the crypto industry where there's intense competition already, right? So if you look at Bitcoin, I think this analogy is great, that if you look at a glacier, you only see the top of it, but the bulk of the glacier weight is actually under. And I think that's where Bitcoin is right now, where it has a much bigger capital base and brand and community and users than Ethereum, but the bulk of that capital is actually not being used right now. It's not productive. It's not getting deployed, and I think that's an opportunity that we can work on. So with the Nakamoto release, when you get fast speeds, when you get easy Bitcoin liquidity, and tighter integrations with Bitcoin, I think there are tons of applications that people can work on. Here's a public tweet I had. I think people can build privacy mixers. So just to give you an example, that there's a fairly clunky L1 protocol for a privacy mixer on Bitcoin that has something like 7,000 BTC in it today, and it's extremely clunky. Imagine a great UX ZK-based mixer and how much usage that can potentially get, right? Similarly, I think given that the Stacks L2 can read Bitcoin state and is very tightly coupled with Bitcoin L1, I think there could be very interesting things with ordinals as well. Like, for example, if you're pegging in normal BTC, can you peg in your Satoshis with which you own ordinals and trade them in a fast way or in a smart contract, and then bring them back to the L1? Also, I think this is an interesting use case that there are already swaps live between Lightning and Stacks, especially when SBTC goes live. I think there could be very interesting things where, because SBTC can be sent to any address, there's no liquidity or path challenges. Can you integrate that with Lightning, where some of the Lightning payments are actually routed over this channel that is guaranteed to deliver, right? Like, you don't have to worry about any of that. And finally, I think I truly think that stable coins are actually something in the industry that have already found product market fit. Most of the applications that are actually have recurring sort of like users who always come back, you'll see some sort of a stable coin play there. Either people have ETH capital and they want to get liquidity on parts of their capital, or they just want to use stable coins for payments or whatever it is. Stable coins is something that already has very strong product market fit. And there's a huge opportunity of just bringing those use cases to Bitcoin, because Bitcoin right now doesn't interact with stable coins that much. With that, let me sort of like pause. I'm sure people will have questions, and I'm happy to take them.
So first up, we have Rafa.
Thank you, James. Can you guys hear me? Yes. It's an honor to be here. Muneeb, you are a driving force for all the builders. I agree with you. Once you discover Bitcoin, everything else is a footnote. I've recently started to learn how to code in Clarity. Thanks to Albert, I got a spot at the bootcamp, and it's beautiful. Clarity is just beautiful. And so being able to ask a question to the inventor, the creator of that language, that is able to read Bitcoin, it's an honor. And so my first question is kind of like really a human question, is about meditation tips. If you have meditation tips, it would be awesome. Then the technical question is more on the iceberg vision that you showed. Yeah, the Bitcoin has to scale on layers, and it's going to be also very important for Bitcoin because, as we know, Satoshi, there's a block subsidy that, there's the halving and all of this, and the fees generated by Stacks and all of these applications built below the iceberg is what going to drive that value to the block space. And Bitcoin is so important for people that, somebody like you who is a researcher, but who also understand, that this groundbreaking technology is so important for us, for
Rafa,
yeah. So basically the question is,
succinct.
yes, what do you say to people like me? I'm exploring options on ordinals directly on the Bitcoin, and I know that there's advancement being done for ordinals to be swapped to Stacks for UX. I know my traders, they want to trade faster than Bitcoin. Yeah, what do you say to people like us?
Yeah, I think the first one, I'll keep it short. I'll just share my personal meditation that sticks with me. Like, there's an app called it's called Waking Up, and it's by Sam Harris. And I think people have different preferences. I just like his way of thinking. Some people find him that he just disturbs you a lot, but I actually enjoy like his theories and his logic and things like that. So check it out if you haven't. And it is a paid app, but I think they have a policy that you can ask for it to be free, and then they would just give it to you for free. So that's my meditation practice that sticks. Otherwise, I just try to take walks. Sometimes I'll just take a walk and take a call in the park, right? So that just helps versus being stuck in an office and just always being there given how many hours we have to work. But on the other thing, I would say the best way, generally speaking, is to think of Bitcoin L1 as something like ETH L1, right? The capital is there, the main user base is there, right? If there's something you can do on L1, you should try to do it on L1. But Bitcoin L1 is much more limited than Ethereum. And for Ethereum, it's mostly a gas issue, a traffic issue. They can't just scale on the L1, so that's why people are going to the L2s. But on Bitcoin, it's also a functionality issue. Like, you can't, it's slow, it doesn't have smart contracts. So then you look at the L2s and you think about, okay, the L2s can be fast and cheap, but they have more functionality. So how do I move things? Like, maybe you define the assets on L1, kind of like peg them into an L2, use them there, and bring them back. And I think this is a use case that after Nakamoto, like if you try to use Stacks today, you'll notice that this particular use case isn't very developed right now. But Nakamoto release is all about that. Speed, cheap things, and then easily pegging Bitcoin into that. So I think if you're trying to build today, I would rather try to see like what's coming. And then obviously there are use cases that can be built today as well with the version of Stacks that's live. Hopefully that helps.
Next, we have Cordy.
Oh, yes. Hey, Muneeb, it was great meeting you at the Bitcoin Builders Conference. That was a phenomenal event. And for the first time, everyone that were building on Bitcoin were actually in the same building. And you would create that event, so it was phenomenal. So a question I want to ask is, so something about Stacks and proof of work and it being renewed on Stacks. How does that work? How does proof of work energy work with recycling on Stacks?
Yeah, awesome to see you there, and I'm very excited about that event, right? Like, as I said, that a big opportunity that I see is just bringing all the builders in Bitcoin together, because it's really like in the previous years, a lot of these projects, they're all want to go towards the same goal, but they're kind of like viewing each other as more competitors than they actually are. And to realize that, hey, look, the rest of the industry is actually maturing faster, frankly. And I think we need to, Bitcoin is the better chain and the better asset. Let's just organize as developers and try to work with Bitcoin. Excuse me. So yeah, I think we'll see more Bitcoin builders events, and I'll be happy to see it grow. On the question, I would say that in the Bitcoin camp, there are pretty strong beliefs around proof of work versus proof of stake, right? Because proof of work, think of that, it's a system that's not self-contained. There is constant capital coming from the outside into the system, which actually keeps everything honest, right? It's not a bubble that people have created, and it's defined by rules just within the system, right? Because I think the classic example would be when the US government couldn't issue dollars unless they had gold, because gold was the external thing that was keeping everyone honest, right? But as soon as they moved off the gold standard, you started noticing how now they can print money whenever they want. Like money actually, it lost its meaning in a way, right? Like, because if you can just print it, you can just keep changing the rules and nobody can sort of like ground you and keep you honest. And I think that's the problem that I fundamentally have with proof of stake, because proof of stake is a system that is defined internally. I think that there's a meme that it's a power cord that is plugged into itself, right? It's not actually plugged into any electric cord. It's not driving any energy from there. And those rules can change, right? Those people can keep changing the rules. So who's in control? Like, it's basically the elites who are in control, just like governments or other elites are in control of the legacy systems. So I think that's why it's extremely important to define something neutral. You have to go to something that is decentralized and accessible to everyone on the planet. And in a way, it's energy, right? Like Bitcoin runs on energy. It's not electricity. It's any form of energy that can be converted into Bitcoin. So Stacks actually follows that. Stacks is not a proof of stake chain. It recycles Bitcoin's energy, and that's how it secures it. And now with the upgrade, it will directly, the same energy that is securing Bitcoin would also be securing the Stacks L2 directly, because it will just follow Bitcoin finality. And I think that's a very important distinction from proof of stake. So one thing you'll notice is that we are very opinionated about how things should be done. Like, for example, we have Clarity. It's a decidable language. It is not EVM, right? And even though EVM has more support right now, because we think it's the right thing to do to have a decidable language. Same with proof of work. Almost every project that launched in the last 4 or 5 years was just following Ethereum because Ethereum is proof of stake, right? Like, we are independent thinkers. We're thinking about what is the fundamental property of security that you want to have, and our answer was not proof of stake. And it turns out that it's much closer to Bitcoin's proof of work, and that's what we're doing.
Yes, and I have one more question. Hopefully, it's not too long. So it's about BNS. I believe self-sovereign identity is the best blockchain use case. BNS is something that's been around since 2014. I know how you guys went from mainnet to now it's on Stacks. What's your opinion on self-sovereign identity in this use case all around the world, and how it could be implemented for DeFi and many applications?
Yeah, I think there's definitely interest there, right? Like, I would say BNS is, again, given the decentralized ecosystem, it's not one of the best maintained parts, right? There are a few contributors, but it doesn't get a lot of love, right? I think recently there are some more teams that are dedicating more to it, but it has something that has organic traction in terms of users getting excited about it, users getting the .btc name, or even I view some of the things on the L1 as, like, for example, the .sats on Ordinals as pretty much on the same line. Like, again, it's about having a Bitcoin name system. And I think there are some recent efforts, if you're interested, where there are working groups being formed for how to even collapse these things together. I do think that there could be almost like a global standard that includes Bitcoin L1, includes the L2s, and I think the BNS, the Bitcoin name system, should just include all of it, right? And I think there's a bunch of more work to be done, but I do think it is something that I've seen that has a lot of organic interest, because imagine if as Bitcoin keeps growing, and Bitcoin is the source of truth for things, then why wouldn't it be source of truth for domains, right? Like, so why wouldn't people want, if Bitcoin is the largest brand, why wouldn't they want a .btc domain, right? Versus something else.
Correct. Thank you so much, Muneeb.
Fantastic. Simov.
Hello, Muneeb. Thanks for your presentation. I'm from a team building Odex.ai. We are an ordinals marketplace and infrastructure API provider that allows third-party apps easily build on ordinals. As you know, currently trading ordinals is slow, cumbersome, and expensive, and sometimes causes network congestion, right? So my question is, how can we improve this ordinals trading experience using L2s like Stacks and Lightning?
Yeah, so I think Lightning I'm not sure of because it's again, Lightning is a peer-to-peer network, right? It doesn't have an execution environment and it doesn't have global state. So it's not Ethereum. But on Stacks, I do think there's a very interesting opportunity here that just like, so people are working on SBTC, right? Like that is well staffed and people are making progress there. Just like I can peg in any Bitcoin. What if I can peg in the sats that own the ordinals? And Stacks is already automatically reading the Bitcoin state, right? So it will already know that, okay, this sat is special and it has these encryptions that you own. And then you can do the trading on the faster L2. It's faster, cheaper, you have more programming ability, a full execution environment, you do everything you can there. And then when you want to withdraw, you go back to the L1. And there's a very interesting analogy here. Like I think people still confuse Bitcoin as a payment layer. It's not really. Like it is a store of value, and it's almost more like a cold storage, right? So it's entirely possible that in the coming years, the way people would think about this, is that when I want to put my BTC or my NFTs into cold storage, I will take it to the L1. Whenever I want to do anything active with it, I want to trade it, I want to send it around, I want to do payments, whatever I want to do, I will use an L2, right? So right now, ordinals they just live on L1. But you can do simple math that even if 1 million people start using it, 2 million people start using it, it's just not going to work on the L1. The fees are going to skyrocket. Only the very wealthy and very sort of like, high-end NFTs use cases can be on the L1. But if the model is that the asset is defined on the L1, but mostly lives and uses and is used on the L2, and occasionally gets pegged out again, it's a settlement, right? I'm going back to the cold storage. I think that can work, but it requires more infrastructure support, right? So it's not something that you can start working on today, but hopefully as the Nakamoto launch is happening and some of this infrastructure goes online, I think that's go. But again, it shouldn't hold you back. Like one of the great things about being a startup is you see an opportunity and you use the open source code and you add in the features that are missing. And in many ways, my company is doing that, right? Trust Machine is one company. We work both on the L1 and the L2s. And wherever we see gaps, we're seeing gaps in the Stacks L2, we're trying to contribute there. We're seeing gaps on things like DLCs, and we're trying to contribute there.
Yeah, amazing. So we'd love to explore the possibility of launching ordinals trading infrastructure involving these stacks. So is it possible for us to get a direct communication line with your team? So do you have a Discord and where we can create a group chat with? So I would like to get technical assistance regarding this architectural decision of our platform. So once our platform is up and running and API is robust, then we can help many other projects joining this space. So we would love to have a direct communication line with your team to get some assistance and when we make such an architectural decision.
Yep, I just shared the link. I think follow it. This
okay.
So the devs are.
Okay, thanks. Thanks so much.
Next up, we have Michael B.
Hello, Muneeb. Thank you so much for your talk. And I'm one of those devs that came from the EVM space and developed on all the other chains that you talked about, like Celo and Solana and stuff, and is newish to Bitcoin. But Stacks was my introduction to Bitcoin development. So I want to ask you two quick questions. One about developers. Especially with the Nakamoto release that you just talked about, how are you or Stacks trying to onboard people that are wanting to do things that they did on the EVM compatible chains to go to Stacks, you know, whether learning a new language like Clarity or trying to do the same things that they did with Ethereum or Polygon, et cetera? How are you onboarding with that? And two, I would like, if you could, to elaborate more on the connection between Stacks and Lightning, because in my local community here in Atlanta, Georgia, they don't really talk about Stacks at all, but they talk about Lightning all day, especially, you know, the wallets that are using it and other applications, you know, building your own Lightning node. So I know that would be of interest if Stacks and Lightning can go together. If you can elaborate on that as well as the second question.
I think maybe I'll answer the second one first. Go check this out. I just left a link. It's called LN Swap. So this thing is live. It lets you do swaps between Lightning and Stacks, and I think that's the first step. But you can imagine that the Satoshis that you have on Lightning, you can buy NFTs on Stacks with it, or you could swap into a stablecoin on Stacks, or you can swap into SBTC on Stacks. Because SBTC, as I said, Lightning has some limitations that you need to find a route to the person, you need to have liquidity, but Stacks doesn't have any of those limitations, right? Like you can pay whoever you want, and you don't need to find a route to that person. So if you can't find a route on Lightning, as a fallback, you could swap out to SBTC and pay the person that way, right? And or it could be a backbone for Lightning, right? Like let's say I'm a Lightning user, you're a Lightning user, but we don't have a direct link. There isn't enough liquidity on Lightning. We can route our payment over Stacks as SBTC to reach your Lightning node, right? It will be two LN swap transactions, but I think those things are very, very interesting. And so you should check that out. In terms of onboarding, right? So we made a very, as I was mentioning, we made a very clear decision. So decidable languages are a subset of Turing complete languages, right? So if you look at it as a diagram, something like Bitcoin script is very, very limited, right? So it's more secure because the attack surface is smaller, but it's very, very, very limited as well. So you can't program many things. And then as you keep growing the feature set, decidable languages are a sweet spot in my view, because they are so expressive that you literally, like we have tried finding a contract that we cannot write in a decidable language, and we haven't been able to so far. Like we've even done experiments where there was a hackathon where we took all the top EVM contracts and wrote them in Clarity as a hackathon, and there was not a single thing that you couldn't write, right? So you can basically write everything. We still haven't discovered something that you can write in a Turing complete language, but not in a decidable language. But the decidable language is more precise. It's a smaller circle than the Turing complete language. And the benefits you get are immense in terms of safety, in terms of knowing exactly what the code can and cannot do, in terms of knowing the exact gas price even before you execute something, right? So it's a massive security upgrade with little to no downside in expressibility, right? So that's why I call it a sweet spot. I think that's where most languages should be. And I think it's not just me, right? Facebook did a bunch of work and they ended up designing something that was closer to decidable languages. Even Avalanche, they are EVM compatible, but their Avalanche native stuff is actually decidable, right? So it's a thing that the industry is going to move towards, and we want to do that for Bitcoin, especially because in Bitcoin safety is very important. So the downside is that there's less support, less docs, less developers know the language, and we're trying to change that. Especially there's a company called Hero. It's a dev tooling company for Bitcoin L1 and L2s, and they are working a lot on it. There are better docs, but there are also things like this. Go to this link. So it's a platform, Hero.
Yeah,
platform.
I know about Hero. Yeah.
Yep. And they're effectively making it easier for developers to easily publish Clarity contracts. I'll mention one last thing on that. This is early stage, but there's already some work started in the Stacks ecosystem to have a WebAssembly compiler that can work with Clarity, right? So it will still be decidable language. You also will still publish the source code itself, which is great. You can see the source code, you know how it's working, but just at the runtime level, you can get the performance of a compiler, right? But that's super interesting because once a WASM like compiler can go live, and again, it's early stage, it might go live with Nakamoto, but if it can, then it opens the possibility that can you also support some other language, which will, I mean, in my view, it will be a downgrade on security, because you're sort of like saying that, okay, but given, I think people will have the option of using Clarity for most of the critical things, it might be fine, right? So maybe for very sensitive contracts, let's say you have a exchange contract that is processing like billions of dollars, it's worth writing it in Clarity, right? Because it's going to make your audits easy, it's going to make code maintenance easy, and maybe the initial hump of like, hey, there's a new language, people can go over it. But if you're just experimenting and you want to quickly do something, or something is not that critical, maybe you want to use some other language that can work with WASM. And I think that could be a path forward, but it's very early stage right now. Right now, I'd say Clarity is the main way to use the chain.
All right, thank you so much.
Perfect. We have 9 minutes left. Brandon, go for it.
I will be quick, James. Nice to meet you, Muneeb. It's a pleasure. I've been a 2-year holder of Stacks belongings, we'll say. I just had a couple questions about Nakamoto. I've read the white paper maybe once just now, very briefly, and then once when it came out, and maybe twice. It's just I've always wanted to ask you in that chance with the SBTC implementation and your PEG and your BLS signatures, your threshold. I get how that works, and I get you have incentive. I'm just not. Do you have any punishment for bad actors if they don't care about the incentive? So, like, let's say a suicidal whale trying to, like, I was going to ask about that.
Yeah, no, that's a great question. So basically, the way we are looking at this, that with a 70% threshold, for something really bad to happen, you need at least more than 30% of the people to agree to it, right? So I think in practice, what's going to happen is that given, Stacks is already supported on, custodians like Coinbase and BitGo and Binance, exchanges like Binance and OKX and whatnot, and a bunch of people are going to participate in signing through these folks, right?
Mm-hmm.
And I think it's entirely possible that these, let's call them institutional signers, they have more than 30% of the, and you can publicly track it, right? People would know, do they have more than 30% or not? But if they do have more than 30%, then I think the safety guarantee is a little bit different. It's also that either Coinbase custody and BitGo and all these parties will need to get hacked or be malicious. I think if they're doing that, our industry has much bigger problems. Like Coinbase is sitting on 10% of Bitcoin, right?
Yeah.
And like 10%.
That's right. Yeah, it's the worst. The most they can do. I figured that in theory.
Right.
Is hurt Stacks. Yeah.
So it's a little bit like it's an open system. Anyone can join. Anyone can become a signer. They do have collateral. So if you misbehave, your capital is locked and you don't get your rewards. But I think in practice, a system is going to be only as secure as how sophisticated the signers are. Right. So if you get a lot of really sophisticated parties on it, it's a very decentralized set. I think that's great. And it's a scenario similar to how Solana, for example, or Ethereum tries to make their signers more decentralized, right?
Mm-hmm.
So we would.
That's right. No, I get that. Thank you. I guess basically, yeah, it's the same where you have with Ethereum with Tornado Cash, essentially, but not as bad because it's not Bitcoin itself, right? So it's not too bad. I guess you definitely the best thing going right now. That's yeah. No, okay. I think I get that.
I want to add something else, right? So we're doing some research on the two other things. One is this model of like, hey, L2 is a hot wallet, L1 is the cold storage. People can also withdraw out to Bitcoin whenever they want, right? So let's say you want to do a trade, you take your BTC into the L2, you get your stable coins, you cash out the stable coins, right? Or you use your Bitcoin and then you withdraw it back. Interestingly, with DLCs, and this is why I said, our company is exploring DLCs as well, you might be able to make contracts where your Bitcoin always remains on the Bitcoin L1. So even though SBTC is there, but you're adding your collateral to a contract through a DLC. So your Bitcoin actually remains on the L1, and whatever additional risk is there of the peg, you're actually not taking it because the Bitcoin travels over the peg only when you get liquidated. And when you're liquidated, you don't own the Bitcoin anyway, so it's no additional risk to you.
That's true. Yeah. I was also thinking, you guys, if you ever want to talk later, I'm open to it for sure. Absolutely. That goes with that question, but maybe a DAO as a way of punishment. I have a tokenless DAO that I've been working on, and basically the delegates in my system, there's a review period where the DAO forcefully buys back their stake, and they're removed for the weaker, the ones that are doing the performance, and it's always the bottom, right? There's always interchanging, just like real government.
Yep.
Just yeah.
Awesome. Yeah. No, I'm on Discord. I left the link there, but Discord is the easiest place to chat more.
All right. Well, thank you so much for answering that. I've been waiting a long time to ask you.
Thank you.
Wonderful.
Go ahead, Albert.
Thanks, James. Jay's next. Jay's a core contributor for ZK.
Hi.
Before he joined a cohort. Yeah.
Hi, Muneeb. Let me try to short my question and to be most clearly. And my question will be about SBTC, and I'm wondering, is SBTC more about the token stake in the layer 1 and then to the layer 2, and then when it back to layer 1 like Lightning Networks, or is there like you got smart contract on the stack, right? So smart contract has new status. Will new status be anchored back to layer 1 as well with SBTC, or SBTC will only reflect the token change? And
yeah, let me quickly describe it. Think of this as like there is a threshold signature based wallet on Bitcoin side, and the people who control the keys are effectively the folks who have capital locked on the stack side. So today, I think maybe 300 million or 400 million capital is locked in consensus. So the people who are locking that capital, they have the keys, but it's fluid, right? It changes. Whoever is locking capital basically maintains the threshold wallet on the Bitcoin side. So when you want to get SBTC, you send your Bitcoin to the threshold wallet on Bitcoin, right? It is trustless. The peg-in is completely trustless because stacks can read Bitcoin state. So the stack's core consensus automatically reads that you sent the BTC in and you said you want your BTC on this address on L2. That will automatically mint, right? There's no one in the middle can stop that, right? When you send your BTC in, you will be the receiver guaranteed on the L2. And then you use it, it's going from one pocket you own to another pocket, right? Like on the wallet, it's going to look like from your BTC L1 wallet to your Bitcoin L2 wallet, you just made a transfer, right? And no one can stop it in the middle, like literally no one can. So that's great. The path going in is good. On the path going back, once you're done using your SBTC, when you say, I want to go back to my Bitcoin L1 wallet, now the signers need to sign it. So that's where the economic security comes in, that these people have capital lock and they're going to either sign or not sign. So that's the trust that goes into the system. And I think it's basically theoretically the best system that you can have without having Bitcoin altcoins, because it is very similar to saying, when I'm trying to move my ETH, are the ETH stakers going to process my transaction or not? Yes, of course they are. They have incentives, they earn money, and they have capital locked. They're going to process your transaction. So over here, the transaction is a little bit different. Instead of being a L2 address to L2 address transaction, it's a L2 address to L1 address transaction. And these people have both capital locked and economic incentives. They earn a reward. They earn a reward every time they process their transactions.
yeah, so like if I have another smart contract developed on the stack and it's not related to SBTC, so would that smart contract result also anchor back to Bitcoin layer 1?
So I think your smart contract, there are two different types here. Like one is a contract that is reading what's happening on Bitcoin. The other is where it's a L2 SBTC that is just in the contract. And then it's completely controlled by the contract. Right? And then maybe the question is, what happens to the SBTC when you peg it out, right? The SBTC sort of disappears on the L2 and it's only on the L1 now, right? So when you peg it out, SBTC supply on the L2 decreases and Bitcoin goes back to the L.
But for example, like BNS, if I transfer one of my BNS domain from my wallet to your wallet in the Stacks network, would there be any change with SBTC in the Bitcoin layer 1?
Because layer 1, no, right? So you can you're just doing transactions on the L2, and people would be able to pay gas fees with Bitcoin as well. So that'll be great user
I
experience.
see.
So you're just paying gas fees with your SBTC.
Okay, thank you for the answering my question. Yeah, I get a better understanding now. Thank you.
Yeah, thanks everyone. I know I couldn't get through all of them, but I do have another thing to jump on to.